So, hello, and a massive hello to everybody. How's everybody doing? Hope everybody's having a great day wherever you may be, whatever you may be doing. This is 50 pips rocking and rolling here, 8th of April, 2018. No trade calls, no recommendations. We're responsible for their own stuff because we're here for educational purpose only. So, what's happening? We'll keep this short because not an awful lot has changed, but things are definitely getting interesting. So as we go into the week, what's happening? If you're looking at the indices, basically our base case hasn't changed. We're in a topping formation and we have to probe lower. As we've said repeatedly, in these kind of phases, you should not be surprised by very aggressive moves, a lot of velocity inside range, and the market really needs to find its footing. But essentially, it is trying to roll over, right? We have this series of lower highs. We're holding heavy, and we've actually broken that initial strong trend. So now we're hovering around this 200, and what we said is essentially, right, as long as we stay inside this 50, 100, and this 200, as we like to say, don't be confused by velocity of move inside range. Now, I've seen a lot of people getting very excited saying, we haven't seen a market like this ever, but essentially, if you look at it in terms of percentage moves, don't get so excited about the number of points we move on the ES or on the YM or on the Nasdaq. You have to compare apples with apples, right? So if you think about it in terms of percentage moves, we haven't seen anything yet, right? Whether there are 2% up days or 2% down days, it's still nothing, right? In the big scheme of things, especially if you've been in the markets anywhere outside of this recent bull run. So essentially going into the week, no change. Our base case is still that our primary targets to the short side are around the 2450s, and extension targets are down into the 23s, 2350, 2310s. We'll have to see what happens going into the week. Daily closes above or below this 200 is going to be key. And especially if we get a daily close back below this area, we'd expect to see quite a quick flush to the downside. And if you're looking at the Nasdaq, because again, we're not going to go through all these. If you're interested in detail on all of these, you can come in to join us in the daily webinars. But if you look in the NDX, what we said, again, there's no change here essentially. After we got this bearish close, this island pattern, this reversal pattern, as far as we're concerned, extremely high odds that we're going to we have a date with these lows and that we're going to try and break those, or at least break them before we decide whether we go higher or lower. And again, right here, we're still stuck inside these moving averages. But if you see the way the market's been trading, it's fairly technical, right? You get this reversal at highs. We break back down, it starts to bounce to the 50, right? Then it breaks through, that's the flush, comes back in, 50, that's where the sellers come back in. They pop back higher, sellers are back at the 100, holding the 200, and now the sellers are back at the 100. So fairly technical, the levels are being respected, so we'll have to see how we go. Again, you can see on the blog, we have all those individual names up, charts for Facebook, Tesla, etc. Those are very bearish, and again, they've been playing out quite nicely. The other thing to keep an eye out for, and as we've been discussing for weeks, we suspect that this is probably the key, is in terms of DXY, right? A lot of people still getting excited about the DXY, but essentially nothing's happened. Yeah. As long as we don't break outside with gusto, outside of these 91s or below these 8850s, this is still not doing much, right? And that's why all the Forex markets are fairly neutral, right? They aren't really, they aren't doing anything crazy. A lot of people saying, well, FX really not moving. Well, for now, it really isn't moving that much. And as long as the DXY gets stuck here, it's very difficult to see why we should see huge breakouts. So again, the DXY is holding here. If you have a bullish bias, you can make a very good argument for the fact that this is attempting an aggressive base and a big bullish rotation to the upside. If you have a bearish bias, you can argue that this is still holding heavy and it ultimately has to break down. If we look at it unbiased, the trend is down. It's stalling at these lows in a sideways chop. This is the previous low. It's still holding below. As long as it holds below this previous low, As long as it can't get back above this level, chances are for a retest lower. If it breaks above there, then we would not be surprised to see a potentially very aggressive move all the way back into the 95s, but that's not the base case here. So that's pretty much what's going on. Nothing really has changed. The only chart we highlighted and we said was interesting from in terms of one of the most interesting charts in terms of opportunities on the Forex side was we talked about USDCAD, right? And as we were approaching, we posted this a lot on the blog, as we're approaching this descending trend line on the weekly, we said we would be looking for opportunities to get short for a move back into the 27 and possibly into the lower end of this range. So if you flip back on something which we consider more interesting as a daily, as a trading time frame rather than the weekly, as you see here, we got into those highs, 2 days, negative closes right here, nice little chance to get short with very tight risk, and now we're making our way back into the 127. So look for the 127 to be pivotal. Again, we've got a lot of headline risk with NAFTA, but if it can bounce hard, then there's no reason why it can't make its way all the way back into these highs. But especially if, you know, NAFTA news starts to cooperate, etc., we trade below 127, we would not be surprised to see it come towards the back end of this this triangle. And again, you know, we're looking here, we're doing there've been plenty of intraday opportunities on Forex side, but here, since we're doing weekly outlook, we have to look at the bigger picture, and this was the only one where we thought we could give ample heads up on something setting up and a bigger pattern playing out. So that was USDCAD. Then the other two things I would say, and we mentioned it last week, because also of the nature of the positioning, which I think is worth keeping an eye out for, is number one, crude, right? So we said here, potential for a big top shaping up for crude. We said that this looked like we had to come back down and retest these 6260s, and if that was going to break, our base case is still for 55. We also said that it almost felt too good to be true that these two reversals were going to hold to go back down, but hey, you know, that's what the chart was indicating. So far that's how it's playing out. We'll have to wait to see how we open on the, you know, with all this geopolitical news. But keep in mind, what's interesting here is if you go back and look at something like a weekly, right? Essentially, where are we here? If you go in from essentially this drop in 2015, from 2016, you see how we're still holding at highs? You know, we haven't been here for an awful long time. And then what's happening is we've failed to hold above this big level on the weekly with a nice clear double top. On top of that, you've got record long positions in the market. People keep on getting long, keep on getting long, keep on getting long. And we've just got a huge double top here at, you know, highs. And the risk is always that unless something crazy hits the headlines, the big risk is that the velocity of the move is going to be to the downside, not the upside. So that's something we would keep an eye out for. And speaking of that, another chart which we would start to keep an eye out for, which is the opposite scenario, is the silver chart, right? What's happening on silver is the opposite, is that we are holding very, very heavy, no real sign of a bounce yet. And if you look at it on a weekly too, see if this loads, you know, holding extremely heavy. And positioning is just record short. You know, market keeps on getting shorter and shorter and shorter and shorter. So the way this is trading and with a positioning, you think this is going to try and clip some stops, cause some pain, and come to the downside. But should you see an exhaustive candle to the downside, or should you see this creeping back above this whole trend line here, back above the 17s or something like that, if it starts to get back above all these moving averages, the risk of the velocity of the move here is a squeeze to the upside. So those are two charts we'd keep an eye out for. So again, that's pretty much where we stand. As we said, good to see moves back in the market. We think things are fairly clear. Things are starting to shape up, as we discussed a couple of weeks ago, or even a month ago. To us, our base case was that down the line, in a couple of months, a lot of people will start to see these moves a lot more clearly. We were looking at them already. The way tech was breaking for us, it was fairly clear. Now, it doesn't mean it's going to continue this way, but again, there's no reason for us to change our outlook, and hopefully things will become clearer and clearer. Again, as usual, thank you for liking, thank you for sharing. Hope everybody has a great rest of the day wherever you may be, whatever you may be doing, and hope everybody has a super week ahead. Talk to you guys soon. Take care. Bye-bye.